What up, my good people? So this is your boy Dr. Candles in the building, aka the humble trader. So this is actually how we smashed Gbpjpy with over 300 plays each one. So this was last week. I took this trade with crazy risk to reward ratio 1:10. I smashed over 320 pips. This was over 320 pips, and then this was also over 250 pips to my TP. I shared the setup and then everything was shared by my students. I gave you some of their success on my Instagram channel. If you are not on my Instagram channel, you can go back and then follow me at Trade with Dr. Candles on Instagram. That is where I usually share my students' success stories. Some people take advantage of their moves and they make money. You can also do that as well. But today I'm here to exactly digest the concept that we used to trade Gbpjpy with those incredible results. I hope you understand. I don't want you to be thinking that all those results that I'm sending we are doing it by magic. This is basically the skills that I'm going to teach you, so that in case you also spot it anywhere in the market, you can actually take advantage and make money. So let me just delay this market and then try to do some quick analysis for you. So this was the trade I took on the that was last 2 weeks, right? So after this trap by market makers, they trap retail traders for retail traders to be thinking that this market was creating a level of resistance. So a lot of retail traders were here waiting for markets to sell. Unfortunately, these market makers break through that level, came here as if they were coming back for retest. Quickly they went there and then took a lot of retail traders account, then came to exactly that supply area I was teaching you guys. So if you haven't watched my video on how banks trap retail traders, you can go back to my channel or just click the link under this description. I am going to share the link on how banks trap retail traders. Trading is the concept of support and resistance. This is exactly what happened. They trapped them. After they have trapped them, you see what they eventually went to that supply area where they had their unfold orders to fill. So immediately they took their orders. You see how they started trending market down. So we literally followed this market from top to bottom. I will share the screenshot to you guys here. We smash it back to back. So the same thing happened here. This happened just last week. Remember, those who joined my Instagram live might have witnessed this. I drew these two concepts, these two demand zone, these two supply zone. I had these two supply zone drawn. The first one was this, and then the second one was this. So I was telling my students, any of this supply zone can hold, because they are level that market makers have their unfold orders. So eventually when market opened, it came back here and then retest that zone and then started dropping. Unfortunately for us, in fact a whole lot of people close some of their profit, move stop loss to break even, only for us to see market hitting that zone, break through it, and then started trending up. Obviously what came in my mind was wow, so these people are trying to go and then pick their unfold orders at the top. So quickly I switch on to the 1 hour time frame, where I can see most of those moves they are trying to do. So you see exactly what happened here. They start to create a level of resistance and then support. They start to create a level of resistance and then support for retail traders who were trading support and resistance, to think that this market is gonna fall around here, or this market is gonna buy here. You see, so a lot of retail traders were here waiting for market to fall so that they can sell. Unfortunately, you see market break through that level. Immediately market break through that level, they started thinking that wow, this market has break through a level of resistance, so it's gonna trend up. So most retail traders started buying this pair around this level. They started buying When they were buying, they were actually pushing the market to hit the level where these banks had their on-fold order. So quickly, you see, we took our zone here. The zone was here. So quickly, this is where we took our trade. I hope you understand me. This is about 1:, let me confirm the risk to reward ratio. So stop loss would be above here, and then this was the trade. Crazy, incredible results. So this was the trade. So our target was to the nearest supply zone. So the trade was about 1:7.2 risk to reward ratio. As I speak to you now, we've smashed TP long ago, over 250 pips smashed back to back. The concept we use here was basically how those banks trap retail traders. Went back to their supply area, picked the orders, and then they push market to the downside. Now there is another way. Remember, I told you that whenever they create those things, they usually have their on-fold orders. If they want to fold, they will also create new level for retail traders to think that this market is gonna go up again for them to fall. So this is where, if you had missed the first trade, you can take another trade. So if you had missed the first trade, what you will do is to wait for them to create that same level, that same concept. You see over here, they created another level. Then they started to frustrate a lot of retail traders with the concept of demand, support, and resistance. You see what they did over here. This was a level of resistance. So resistance here, you see market came here to resistance, here resistance, it dropped, here resistance, it dropped. So obviously this is a very strong resistance. So a lot of retail traders were there waiting for market to fall around that level. You see, let me just replay the market. So you see, a lot of retail traders were here waiting to sell around this level. But because these banks, they had on-fold orders to fall around here, what they will do is that they will help the retail traders to push market to the upside, so that a lot of retail traders will be thinking that this market is going to trend up. Then the volume or the percentage of people who are buying pound JPY around that level will increase. So you see, this is how the market is going to do. You see, the moment market start ranging around this level, you'll be thinking this is a very nice resistance area. You can sell. But immediately market breaks through that level, what comes to your mind? Immediately market breaks through that level, every retail trader trading support and resistance will be like, wow, this level has been broken, hence I'm going to buy this pair. Unfortunately, you see, they went there and then tap on their supply zone. So once they amassed those retail traders trying to buy, then they will execute their opposing sell orders for that order to be matched with the retail traders order. So basically market is gonna fall here. So if you are a retail trader who wants to follow the footprint of the bank, you don't sell at the resistance area, but you rather wait for them to break that level to a very major powerful supply zone. Then you can sell. So when you sell, you can target your profits, your first profit to the nearest support area, and then your other profit you can zoom onto the nearest supply zone. So somewhere around here. So here can be your TP1, and then here can be your TP2. So exactly, you see exactly what happened when after they have trapped retail today. You see exactly what they did. So that is how it works. So nothing of magic. Everything was done by the banks. They actually trap retail traders. So this is exactly what has been happening over and over in the market. So take advantage and then make money. Thank you guys. If this is your first time on this channel, kindly subscribe, smash the like button, share your comment. I usually read every comment. What you don't understand, just drop it at the comment button. Whenever I come online, I reply almost every comment. Smash the like button, share the video for your friends to identify my channel, and then don't forget to subscribe if you are new on this channel.